Amphenol stock has done very well over the last 5 years. We can see from the chart, it's gone up 170% over the last 5 years, while the S&P 500 average has only gone up about 90. It also pays a decent dividend, just under 1%. The S&P 500 does about 1.25, so roughly comparable there as well. And Amphenol has done very well over the last 10 years as well. Since late 2014, early 2015, it's up 420%, right? S&P 500 over that time frame is up about 225%, roughly. So clearly this stock has been doing extraordinarily well. I'm assuming most of you know what the company does, but in case you don't, they do a lot of electrical stuff, manufacture electronic fiber optic stuff in the United States, harsh environment solutions, that sort of thing. So they're kind of a blend, an interesting blend between tech and industry, right? So they command a fairly high PE. They've done very well, and they're very vital to a lot of, well, certainly data centers. That's really what I like them for, because data center needs all this. I work in a pseudo data center. You need the electrical equipment. You need the fiber optic. You need all of that. And believe it or not, with the AI boom, you get a lot of those data centers. Even outside of AI, you have a lot of cloud centers as well. So Microsoft, Google, Meta, Amazon, Apple, all of these companies have these data centers and more on top of that. But those are just the large players, right? So they do more outside of data center stuff. But what I really, really like them for is they do all that stuff that's required in data centers. So that's one of their key things. But outside of that, they're still incredibly valuable to a lot of stuff. Like, they don't just do data centers. Their market cap's $81.5 billion, which means there's obviously a lot of room to run. PE ratio of 39 seems fairly high. Let's take a look at forward PE. So yeah, forward PE is 37. You can see all the projections. Every single quarter projected for next year is higher than, even though certainly higher than their original projections, but they beat on every earnings, somewhere between, looks like 6 to 10%. And even from where they beat, the projections of earnings are higher. And if you're being a little not conservative with it, maybe a little bit, aggressive, or taking it from what we had this last year, you can maybe expect this to be a bit lower because they beat all 4 quarters this year, or within the last year. Technically one in 2023, but you can probably expect these to be a little bit higher. Raise a dividend, that's a substantial raise, although dividend is probably not the key for buying this stock. There's plenty of stocks that have a great dividend. That's might be a driving factor for owning the company. This is not one of them. Yeah, so like I said, I mainly like the most important thing for a long-term investment, right? Trading is one thing. I'm assuming most of you here are not here for trading Amphenol. Maybe you are, but most of you, most people who are long-term investors want to do so for the specific company, right? I own a lot of companies primarily because of the competitive advantage they hold or the industry they are in, hopefully a combination of the two. This is a company, you can see economic moat wide. I agree with this. There's not a lot of companies that can do what they do in this industry, right? So like I said, this isn't a tech stock, but they're so key for other tech stocks, at least in the, at least in this time frame, it sort of is, just because they're so essential. I own a lot of companies. I own a lot of tech companies. I own TSM and ASML primarily because, well, 2 primary reasons. One, because of AI, and I believe in it. I don't own all AI companies, but I believe in it. I own a lot of key pieces. And 2, because of their near monopoly in the market. Amphenol is similar to that, and maybe not quite as extreme, but they do have a wide economic moat, and they're very key to all the stuff that goes into, like I said, data centers. So this is a high PE. Just realistically, historically, it is a high PE. However, for a company that has roughly doubled the S&P 500 performance over the last decade plus, it shouldn't be surprising that you see this. And like I said, it's not a tech stock, so that's a little bit iffy too. However, the way, how key this stock is right now, it's really not too much of a concern. As a long-term hold, it shouldn't be too much of a worry. However, if there were to be a recession or short-term money pouring out of the market, maybe in specific sectors with AI and all that, you may see a bit more of a downside to share price than the average company. That's the realistic thing of holding a higher PE company, right? Historically, S&P 500 is somewhere between 16 and 33 at the highest. It's about 27, 26 right now. Amphenol is significantly above that, even if we take the forward PE and are generous with it at 34. So as a long-term hold, this company is fine. 5 to 10 years, you'll probably be happy you had it. Of course, no one can see the future. Weird things happen. You can see that, all throughout the market. But as a long-term hold, this company should do well, should do very well. I do not personally own it. I'm looking to own it sometime in the near future. It's only because money is finite. I'm not made of money. I don't have $10 million. I'm going to just throw out every single stock I like. So that's not necessarily why I don't own it. Let's look at what some analysts have to say. Schwab gives it a 30 percentile. They mean it's going to be the top 30% of performers. You may say that's not fantastic. However, it's a 1-year time frame, so they actually think it's undervalued, even with the PE where it is. And even a 50 percentile ranking isn't terrible, as the average stock in a given year will go up, right? They reiterated that about a week ago. 3 stars, like I said, I hate the 0, 3, 10 scaling they have here, but I would agree it is definitely closer to wide than narrow for the moat. 3 stars long, buy. Slightly below average ESG score, whatever you think of that. Let's take a look at what some analysts have to say here. There's a lot more analysts this month for some reason. Just over half are saying buy, but a quarter of which are saying strong buy. No one's saying sell, although if I'm honest, very few analysts ever say sell. Whatever reason, I don't know. But even last month, 2/3 were saying buy. So I don't know who these few other mystery analysts are. They're saying hold this month, but whatever it may be, this company is still being recommended to buy. I don't put too much stock into analysts. I generally think they should be factored into the wider picture you make of a company and a stock and see if that's what you want. So just to wrap, this company as a long-term hold should do fine. It should probably do better than fine. You'll probably be happy you owned it. And if not, I doubt this is going to be a terrible performing stock. Of course, no one really knows the future. I don't. This is not investment advice. Of course, do your own research. However, this is a company I, over a long-term hold, think will do pretty well. And I'm probably going to put my money where my mouth is once it's the right time, personally. So I appreciate all of you for watching the video. I am a newer channel. I'd appreciate if you left a like if you enjoyed the video, if you want to see similar content. I cover all sorts of stocks daily on this channel, so I'd appreciate if you subscribe if you want to see similar stuff. But anyways, that's all I have for today. Thanks for watching.